My name is Scott Cook, and thank you for joining us for the Wednesday webinar on how to start building credit. We'll kind of get started in just a second, but of course, we'll have a few little housekeeping things that we'll take care of as people start to kind of join us here. I see the numbers are starting to kind of go up a little bit as people are being entered into the webinar. But again, we'll be discussing how to start building credit today. And I just kind of like to point out that we're not going to get into a whole lot of detail just on what credit reports and scores are. We covered a lot of that last week in our Wednesday webinar. And of course, we have a lot of those topics on our YouTube page. So you can go into our YouTube page, SCDCA TV, and you'll be able to watch a lot of these presentations. And if you're able to download the slides, we'll kind of get them in the chat here in a moment. But you should be able to kind of hover over the names of those webinars and be able to watch some of the different webinars that we've got on YouTube about credit reports. And that includes the one we did last week, Reports and Scores Demystified. And then we have What to Know Before Paying for Credit Repair. And then we also have our credit card basics as well on there. And those are all things that you can find on our YouTube. So we encourage you to take advantage of that. As always, we'd like to give our quick disclaimer. I'm not an attorney. This presentation is not meant to substitute for reading the various laws discussed, seeking legal counsel, or otherwise requesting department guidance and/or interpretations on the laws it administers and enforces. The presentation merely serves as an introduction and overview of our topic. And we'll give you a quick little roadmap for what we'll be covering today. I'll do our quick introduction into the South Carolina Department of Consumer Affairs, tell you a little bit about who we are and how we may be able to help you. Then we'll talk about credit. What is it? And then we'll look at what credit is needed for, and of course, the things you came for today, how you can start building credit. And then we always have our free resources that we point folks to that will help you out. So how can SCDCA help you? Most people know us through our complaint process. We received nearly 6,000 complaints last year from consumers in our state. So you can go to our website, consumer.sc.gov, if you have an issue with the business. And sometimes it's just kind of helpful to write out another party, tell them what's happened, what you would like to have happen. And sometimes just having another person who knows how to get in touch with the right people at a company can kind of help you get a resolution, or at least some sort of answer of why a situation may have happened. You can report a scam to our office. Even if you didn't fall victim to a scam, you can go to our website, fill out a scam report. We can take a look at that, and we like to know kind of what's going on through the state, and we use that information to educate other people as well. So hopefully we can prevent other people from becoming a victim as well if you report those types of issues into our agency. And we have an identity theft unit who can walk folks through identity theft situations that may arise. They can kind of go through a little checklist with you of different places you may need to contact, different accounts you may need to check on, and the things you might need to do to kind of minimize damage depending on what's happened with your particular situation. And they can walk you through all of that. You can background a business on our website so you can find out if we license a certain business or not, or if it's another state agency that might register those businesses. We can point you to the right direction with those. And you can also go to our website and search through our complaint system, and it'll give you a little bit of information about a company, and you can kind of use that information to decide if it's somebody that you might want to do business with or not. And you can kind of get a general sense of those complaints that might have been filed with our agency. We give free presentations. We go all across the state doing these in person with a variety of topics. A lot of times it's identity theft and scams. We also do a ditch the pitch bingo where we play bingo with folks and give them kind of tips with each number that's called through bingo. And we do that for free all across the state. And we also will do virtual presentations, kind of like the one that you're watching right now. And of course, we try our best to get answers for people if there's a question that you have, even if it's something that we might not be directly involved with. If you email us or give us a call, we'll do our best to try to get you pointed into the right direction and hopefully get you some sort of guidance on where to go. So now we'll kind of get into the topic of our presentation today about how to build credit. And we're going to kind of start with what is credit? And of course, it's borrowing money to use now with a promise that you're going to pay it back later. And a lot of times with those credit scores and things like that, or just kind of your credit in general. And we're talking about that, companies are kind of looking at you and deciding how likely you are to pay that money back if you're, borrowing money for a product or something like that. So of course, good credit would mean you're easy to trust and you'll pay that money back. Bad credit might mean that you're harder to trust and that, you're less likely to pay that money back. And of course, when we're talking about credit, kind of the big idea is you're getting something now and you're paying for it later. And a lot of the ways that your kind of credit information, when you're being determined if it's good credit or bad credit, a lot of that information is determined through your credit reports. And those credit scores are being used to kind of help determine that. So basically, your credit reports are going to be that list that's going to reflect everything that you've done with your credit or your credit activity. So it will be that list of everything you've done, any loans you've taken out, any things that you might have open. I say loans, it could be credit cards, could be, your car loan, your home loan, different transactions that you've made, accounts you've opened, those things will all be listed on there. And then when you think about your credit score, it's that calculation. So it's that number that companies are using to try to, predict how well you are with credit and how likely you are to pay those things back if you're borrowing money. So real quickly, and again, we're not going to get into a whole lot of detail on the credit reports, but just a little bit of the information about what's on there. It's going to be that detailed record again of how you've managed your credit over time. So it's going to list things like your credit accounts, limits, balances, payment history, might even have some public record information on there like bankruptcies, liens, any civil judgments, any of those types of things. And those credit reporting agencies, Experian, TransUnion, Equifax, they're getting all that information from those companies that you've done business with, any of those creditors, and again, public records, and they're compiling that into that big list of that report that kind of outlines what you've done with your finances over time. And again, Equifax, Experian, TransUnion create those, and we kind of encourage folks to go through annualcreditreport.com. And we want you to look at that, at least once a year. Annualcreditreport.com will give you access to those reports for free once a week right now. So that is, available to you. But if you're going through it quite regularly, kind of looking through those things, making sure that there's no mistakes and that everything on it belongs to you, that's going to be the best way to kind of keep track of that. And those credit reports are being used for a lot of the different types of things that we're out trying to, use money for. So of course, the big ones would be in a home, a car, but might also be used if you're getting a job, if you're applying for some type of, thing that's in the financial field. They may be looking at how well you've spent money over time, or, if you're paying your loans back, those types of things. I always tell people recently I've applied for a new internet. They looked through my credit reports, before sending me that device that, set up my service in my home. So that was kind of one of those ways. If you're looking to rent an apartment, they're definitely going to go through your credit reports and just kind of determine, if you're going to, pay that monthly bill or not to them. And insurance companies will also take a look at your credit reports, and they might use that to determine your rates, or they might use it to decide if they're going to, provide that service to you or not. So it's just some of the different companies and the different ways that are out there that are taking a look at our credit reports and making decisions based on them. So as we get started, kind of talking about credit and the catch-22 with it. You want to buy a house for the first time as in our example here, but lenders keep telling you that you don't have enough credit to be approved for a loan. And if you're trying to apply for credit cards, you may be denied because you don't have enough credit as well. It's the same thing with a car loan. You're getting denied because you don't have enough credit. So the big question, of course, is how are you supposed to build credit if you can't get approved for credit? So that's going to be some of the different scenarios that we'll kind of outline for you today in this presentation. And kind of our option one, and it's one we briefly touched on last week, is the secured credit card. And that's going to be a card that you can put collateral up front. So you have money that you've put in, and it goes into a dedicated account that the financial institution is basically using for your card. So that's the secured part of it. So like the example that we would give is, maybe you've put in $1,000, and then that's going to be your credit limit for that card. So that secured credit card is kind of backed by that $1,000 that you've put in there. And of course, to get a secured credit card, you're going to make that deposit with the financial institution that issues that card. And then that limit that you've put in there is going to be the maximum you can charge on that credit card. So again, in that example I just gave, if you gave them $1,000, that $1,000 is going to be the maximum you can charge. But of course, you're expected to pay those every month too. Some of the things to kind of keep in mind with these secured credit cards are some of the fees. They might have annual fees, monthly fees, or some of those. So you kind of want to take a look at what the offer is with the bank and, make that decision from there. Generally, in the first year, those fees aren't supposed to be 25% of the credit limit in that first year. So you want to read the fine print. Make sure you understand the fee structure that they've set up, especially for that first 12 months. The credit utilization rate, you want to make sure that you're keeping the amount low, and you want to keep it as low as possible compared to the credit limit. So again, in the case I just gave a minute ago, if it was $1,000 you put in there, that would be your limit. So you want to keep that utilization rate low. So you don't want to be spending $999 on that card every time, because that's going to be a pretty high utilization rate. So again, keep those low, and that will help you a little bit. And of course, you want to keep in mind those payments. Like we said, you want to make sure that you're paying everything in full every month, and that will kind of help you out too. But you won't want to miss those payments. So if you're trying to build credit, you want to, establish that history that you're paying everything in full and that you're trustworthy. So that would be kind of the example or the reasoning behind that. And you also, and we're going to say this a lot throughout the presentation, you want to make sure all of this is being properly reported to the credit reporting agencies. So if you're taking out this type of account with the financial institution, you want to make sure that they're reporting it to Experian, TransUnion, and Equifax. And that's going to help you kind of build that credit over time, as those things are showing up on your credit reports that you're paying these bills and you're managing it well. That's going to kind of help you build that credit. So as you're trying to build credit, you want to make sure all of these different things are being reported to the credit reporting agencies. And again, you'll check those credit reports, annualcreditreport.com, and make sure those payments and those accounts are showing up and everything's accurate with that. Our option 2 would be to get a credit building loan. So usually these are installment loans, maybe $1,000 or less, and you can repay them through regular scheduled payments, usually over 6 to 12 months. So it's that 1 year, right? So you're kind of borrowing that $1,000 for that 1 year time, and you're paying it back. Kind of the thing to watch out for these type of loans. Again, the interest rates, you want to be able to make sure that you can afford it and that you're paying it back, but you also want to keep in mind that interest. And remember, missing payments can kind of mess you up as well. So, you want to do those things on time. You want to make sure you're paying everything in full on time, and that's going to help you kind of build that line of credit. Whereas missing or paying them late is going to harm your credit. So you want to make sure you can afford everything and that you're going to be paying it on time and again, in full. And a big rule for all of these, once again, making sure everything's being reported to those credit reporting bureaus. Kind of our option 3 now. And this is one that may be tough for a lot of folks, but you can become authorized users on somebody else's account. So this is probably going to be somebody that you have a pretty close relationship. Basically, it's going to provide you with a credit card in your name, but somebody else is responsible for that account. And you want to make sure that that primary account holder is somebody who's responsible, they have good credit, and when you're both paying these things in full on time, it's going to give you a slight boost to both your credit and that person's credit. So it's going to help the scores on those. So, again, you want to have a close relationship with this person and make sure that you understand, that they're paying their bills on time. And of course, like we've mentioned, you want to make sure all of these things are being reported to the 3 major credit bureaus, Experian, Equifax, TransUnion. And you don't want to have missed payments. Late missed payments going to affect both your score and the person whose name is on that account as well, that authorized user. So you want to make sure that those payments are being done in full. You're not missing those payments, they're not late. And again, that's going to help both of you kind of build that credit over time. And you can also get a co-signer You can ask somebody to be a co-signer. Maybe they have good credit, and then they can help you kind of credit that loan. And they're going to agree that if something goes wrong and you're not able to, that they're going to repay that loan if you're not able to. And again, these are kind of situations where you're probably close to the person, maybe related to them or a close family friend. The things to kind of watch out for in these types of situations, of course, the relationship. If you don't pay back the loan, that co-signer is going to be responsible for those payments. So if you miss that payment, you probably damage that relationship that you have with that person. And of course, as we mentioned, you want to make sure all of these payments are being reported to the credit agencies. So that way, both you and the co-signer are listed on there, and that that information is being reported, and you're kind of getting recognized with those credit bureaus that you're making these payments and that you have this loan and you're being responsible with that. Kind of our option 5 now is going to be to apply for a credit card at a store or a gas station. And kind of the thing to keep in mind with these is they're usually kind of lower credit limits. They probably have a higher percentage rate that they're charging with those, but generally they're a little bit easier to get approved for. So that would be kind of the trade-off with this. So if you're having trouble kind of establishing those larger credit cards, something at one of the stores, when you're checking out and they offer you these types of things, a lot of times they'll have them in the apps. You can use those kind of store credit cards to be able to kind of establish that history. And that's what you're looking for with all these things. Generally, some of the retail stores would be somewhere you might find this, or some of the gas stations, but all of these, again, thing to keep in mind, lower credit limit. So you're not able to put, as much money on that card, but then it's also going to have a higher annual percentage rate. So keep those things in mind whenever you're deciding if you want to apply for any of those. And again, as I just mentioned, the thing to watch out for would be that interest rate. So you want to make sure you're not charging more than you can pay, and you want to keep that balance on these types of cards as low as possible. Again, you're kind of looking at that utilization limits and kind of what that maximum is that credit limit's going to charge you, and you want to keep those fairly low, but you want to make sure that you're paying it all in time too. So it's all about showing that history of I'm responsible, I have this card, and I'm able to pay this off each and every month. And again, anytime you're taking out these types of accounts, you want to make sure they're showing up on your credit reports with Experian, Equifax, and TransUnion. And you want to make sure that those are all showing up and that they have the correct limits and everything listed on those accounts. And kind of our option 6 is going to be to make a large down payment on a purchase, and then maybe you negotiate a loan for the rest. So a good example of this might be a car, something like that. And kind of the example we have here is if you have a used car that's listed for $5,000 and you have enough cash for it, you might want to consider paying down, $1,000 to $3,000 for it, and you take out the loan for the rest. And again, it's all about kind of showing that history of I'm able to borrow and I'm able to pay it back. And again, that repaying is going to build that credit history for you. And some of the things to watch out for with this, again, interest rates. Unfortunately, that's kind of the situation with a lot of these things when you're trying to build from scratch. With this, those interest rates might be high. So it's kind of important to look at how much you're borrowing and what you're going to have to pay back, and make sure you're able to, pay all of those in full, including that interest rate. So don't forget about those interest rates when you're borrowing that amount of money and what you have to pay back each month with that. And of course, if we're talking about a scenario where it's something like a car, missing those payments, you're probably putting up, that car or whatever you've purchased as kind of the asset that's, up there. So if you don't pay in full, that could be repossessed. So again, that car is a good example of that. If you're missing those payments, they're probably going to come and take that car from you. So that's kind of that trade-off with that type of thing. And again, you want to make sure that these types of loans are all being reported to the credit reporting agencies. Kind of our option 7 here, and this is a tough one to do a lot of times, would be to create some kind of alternative credit history. What are the bills that we're all paying each month? might be things that don't show up on the credit reports. So sometimes a business might allow you to kind of create that record of showing that you're paying all these things in full. And you're using that to kind of go along with the credit report or to kind of go in place of the credit report. There are some links here. Hopefully you'll be able to get into this. This is one with the FDIC that will kind of give you a little tools on how you can create this alternative credit history and the things you can do with that. That would be a good little tool to go through. But again, it's kind of outlining all the things that you're paying anyways every month that aren't showing up on that credit report. So it might be those things like utility bills, cell phone bills, and things like that. But kind of the trade-off with that is a lot of businesses probably won't accept this as kind of that alternative in place of the credit report or score. So that's kind of the hard thing to get somebody to accept that. There might be cases of like a small business, like a maybe a furniture store, somebody like that might work with you a little bit more, kind of using this type of thing. But it might be a situation where, especially if you know the people who work at that store or run it, they might be able to kind of work with you and accept that. And if that is the case, of course, you're going to want to be able to provide evidence of everything that you're putting into your alternative credit history. And that might be things like receipts, statements, any letters from businesses that you're paying regularly. So you're kind of creating that report yourself. So you want to have all those documents to be able to kind of back up everything that you're saying that you're doing with these. And that might be kind of the trade-off with that. But again, you'll kind of need to work with those companies if that's something you're wanting to try to use. It can be a little bit hard to get businesses to accept that. So just kind of keep that in mind as well. And we do have a couple of different little free resources with that will kind of help you out. We've got a different couple of things. Federal Deposit Insurance Corporation. This link will kind of give you some of those other tools and things to kind of keep in mind too as you're trying to build credit. We also have a lot of information on our SCDCA money and credit section on our website. So if you'll be able to go to that section of consumer.sc.gov, and that will give you some great resources as well. And hopefully, if you can get to the slides, and I'll drop those into the chat here in just a moment, you'll also be able to download our credit reports, what they are and why they matter book. And that is a great resource as well, just kind of give you that outline of different things on your credit report to go through and check, and it'll give you kind of a better idea of how to manage some of those resources that are showing up in your credit reports and kind of how you can read all of that and make sense of a lot of the details that are showing up. And if there's other information you want, we do have a good bit of info on our website, consumer.sc.gov. Again, the credit report guide is there. You'll also be able to order Ditch the Pitch, which is our scam prevention book, and our identity theft prevention guide as well. We will send up to 50 of those publications to you or your community group if you're looking for hard copies of those. And of course, we also have PDFs of those as well on our website, so you can look at them on your phone or download them and take a look at them, whichever way kind of works best for you. And I do kind of want to encourage you to sign up for our next couple of webinars if you are interested. Next week at 10:30 a.m. we'll be discussing cybersecurity in 4 simple steps. And these are tools that the FBI and Homeland Security kind of recommend to us of different things that you can do to kind of monitor your accounts or to protect your accounts a little bit better. Sorry, I'm kind of stuck in credit report mode there, but they're going to give you kind of 4 simple steps of things you can do to protect your devices and your information from cyber thieves. And then on April 30th at 10:30, our folks in our advocacy division will be discussing understanding your electric bill. So we know there's a lot of different things that show up on your bill besides just, how much do you've used. So there's lots of other little items on there that you may not quite know exactly everything that you're being charged for on those bills. So they'll kind of go through kind of what a normal electric bill may look like for a lot of folks in our state and kind of outline some of those things that may be listed on there and help you kind of get a better understanding of what all is on those electric bills that you receive each month. And we do encourage you to follow us on all of our social media platforms, Facebook, X, Instagram, and of course I mentioned YouTube, which we have a lot of our different credit related webinars listed on our YouTube page, SCDCA TV. And I'm gonna go into that box and see if I can get you guys that presentation. So let's click on there. I'm gonna try to get that to you. Hopefully it's showing up. We'll drop that in there momentarily. There we go. Hopefully that just went to everybody. It says it went successful. So if you can see that in the webinar chat, you should be able to download those slides. And if you're not able to get those, I will email them out. So if you get the public information emails about all of our webinars, you can just reply back to that one and I will send that email over to you, reply to that for you and get you those. And I will also get my email address here up on the screen too. So if some reason you did not get any of those slides, you can shoot me an email and I will reply to them as well. But also, like I just said, if you get the emails from our public information each week about the different presentations we do, you can just hit reply to that and I'll get you that. And also just dropped in our credit reports book as well. That's a good tool for everybody. It's that what they are and why they matter book. And that has a lot of information about our credit reports and the different things to look for on there, and has all the information about contacting Experian, TransUnion, and Equifax. And like we mentioned, annualcreditreport.com is going to be kind of your best spot to go to for all those, because it is kind of outlined by federal law, the different information that they're able to provide to you. They're going to provide it to you for free, whereas other sites may be using your information in some way, or kind of be set up to get details about you for advertising purposes or other different things. So annualcreditreport.com is going to be where we recommend folks go to. All right, that should wrap us up, and I hope everybody's learned a little something today. And if there's anything else we can help you with, please let us know. Like I said, my contact information is right there. And we hope you'll join us next week for our Wednesday webinar. And I hope everybody has a good rest of your day. We'll see you next week.